My guess is it's probably before the market expects. I think a lot of people are resigned to the SEC will wait until March, the absolute latest. I doubt it, but who knows? Now, I talk about this a lot. If we'd have launched a Bitcoin ETF last October, there'd have been nobody buying it, right? So price needs to be positive and rising for people to want to buy it. And we haven't seen that yet, not enough. So really, if they launch it tomorrow, could you attract $1 billion of RA assets? Fine, but the government and FTX are selling more than that and stuff. What we really need is, let's say Bitcoin's trading at 40,000, looking strong. You launch an ETF. Okay, then we're talking, well, maybe 5 billion comes into the space. And if it goes up, then you get to 10 billion. And before you know it, it's real money into the space, fresh capital. But right now, it's not the biggest deal, but it will be as an on-ramp when the market picks up. When we're in crypto summer, we'll look back and go, bloody hell, there's a lot of money in that ETF.
What's your take on these recent SEC losses that they've been taking against crypto companies?
You've got to be pretty brave to take on the crypto space, because if you actually look at it, it is ludicrously smart people. It's kind of the best of finance, the best of technology. You've got people with a mission. So you've got super, super smart people who are mission driven. So lawyers will go into the space to prove a point. Everybody will prove a point, and people will fight to the death if they can afford to. Coinbase, Ripple, Grayscale, everybody. So as the SEC, you are not taking on some little small token, some small project. You're taking on kind of the best of the best here. The space is very smart and very driven. So it doesn't surprise me they've taken the losses, because these people aren't stupid. That's why the Uniswap thing came through as well. I mean, it's like, well, people built Uniswap. Very, very smart people built it. So it is decentralized and there is nobody to sue. That's the whole point of DeFi. So the point being is a lot of this stuff has been thought about in advance. So it makes me very optimistic of how many losses the SEC will take versus wins. They get wins against people who don't want to fight, like Kraken. They just don't have the money to fight them. But Coinbase is just going to fight them to the death. And that's what Brad Garlinghouse did too. And, good on these people, because somebody had to prove it through the courts and not via coercion.
Picture this. Bitcoin on a rocket to $250,000 in the next 24 months. How? Well, let's break it down. Imagine Blackrock launching an ETF worth around $5 billion. To pull this off, they'd need a ton of Bitcoin. Remember, $1 billion buy has moved Bitcoin by 10%. So BlackRock alone could send it soaring to $35.40. Once that ETF kicks off, the media will go wild. This ETF could be the superstar of the stock market, and it's getting a red carpet welcome. All that buzz could help Bitcoin revisit its all-time high. Bitcoin's next halving is coming. These events have minor rewards, usually making Bitcoin's price pop. Just this could double Bitcoin's value to $140,000. As Bitcoin gathers steam, expect big money players to jump in. Venture capitalists and institutions will want a piece of the action. That could easily push Bitcoin to $300,000. The stock-to-flow model, a sort of Bitcoin crystal ball, points to a peak of $360,000. With everything adding up, it's like a bull market symphony ready to rock. Buckle up, a $5 billion BlackRock ETF, Bitcoin's halving institutional love, and the stock-to-flow model all hint at Bitcoin hitting $250,000 or more in the next 2 years. The bull's back, folks. Now let's talk big dreams. MicroStrategy's Michael Saylor says Bitcoin could be worth $5 million someday. That's 50 times the usual predictions. Saylor's got a plan. 3 things need to happen. Spot Bitcoin ETFs launch, banks start offering BTC financial stuff, and the US steps up with official regulations. 2 of these are almost here. Spot Bitcoin ETFs might debut soon, and the Financial Accounting Standards Board, FASB, is cooking up crypto accounting rules. Now a billionaire's wallet tale. Mark Cuban lost nearly $870,000 in a MetaMask wallet hack. He admits he might have downloaded a dodgy version. It all went down on September 15th. An eagle-eyed blockchain sleuth noticed unusual moves in Cuban's dormant wallet. So even the mighty can have wallow woes. Stay safe out there, crypto folks. Let's continue our discussion with Raoul Pal.
We've got very little liquidity coming into the crypto market or the traditional markets. We've got the central bank still tightening, so there's just less money around. So even you've seen that the positive narratives, and there's been a lot of positive news in crypto, hasn't really driven price. Because the other thing is, we're not bringing many new people in yet. And there's a lot of supply on the market from, Mt. Gox, government stuff, FTX, and that just weighs on the market when there's no new people coming in. We're seeing it in traditional markets as well. There's just not a lot going on. It's kind of very summer feeling about it, drifting around, not that many people participating. You can see it on Twitter, you can see it in other places. Just engagement in the space is pretty low, but people have forgotten the space is up 50 to 100% this year. It's very quick to forget in crypto. Unless it's up 300%, we don't care. So you have to take it, crypto is still the best performing asset class in the world this year, but we kind of feel miserable about it because it's gone sideways or down since April, let's say. So overall, my view is that the central bank is likely to start to see inflation falling and unemployment rising and economic growth slowing or staying slow. And so that means for the back end of the year, the more likely outcome is they stop raising rates. Okay, that's plus point number one. B, if the bond yields keep rising as they've been doing, they'll probably stop quantitative tightening at some point. That'll be a plus number two. And then if inflation starts falling below 2%, which I think it will do towards the end of the year, they'll cut rates as well. So that's plus point number three. So that shifts the kind of liquidity cycle as it brings us into 2024. Now, 2024 is not only will we see, so all of my forward-looking stuff about inflation and unemployment, rents, those kind of things, they should continue to come lower. So that means the central bank now has the excuse to cut because they need to refinance all of this debt that they've got. And there's trillions of this stuff, and they can't refinance it at 5.5%. Just it's mathematically impossible almost. So really what I think they're trying to do is make it so they overshoot to the downside, so then they can cut and do the necessary things. Also, 2024 is an interesting year because it's an election year. So we tend to get more stimulus, whether it's government handing out money. There tends to be more money around to bribe voters. So I'm very positive on the last quarter of this year. I think it'll be volatile, let's say until October, and then we should have a good run going through. And then I'm very positive on 2024. Now, none of these things will go in a straight line, but generally the first year of crypto spring looks like this. It goes up a reasonable amount, but it's choppy and sloppy and people don't really buy into the story. Then the next year of crypto is when spring turns into summer. We tend to have a good year, not ridiculous year, but a good year. And then the year after that, we tend to have a ridiculously good year. So that's generally how things have played out. I think that's based on a macro cycle. I think that's how it's going to play out this time. The economy slowing down and inflation coming down. So if the housing market's really slow, rents start coming down. Rents are like 70% of core CPI. I mean, these are huge weights. So nobody's going to be able to jack up rents, particularly if they start having to cut interest rates at some point. So mortgage payments come down, and that takes a while to feed through. There's about an 18-month lag of this stuff. So as you said, as housing slows down, it means the economy's slow, which means more stimulus. All they want to see is the magic number of CPI going below 2%. Because they also know the forward-looking indicators. They're not stupid. There's like 1,000 PhDs at the Fed. They know it's not like, oh, that surprised us. So therefore you have to ask yourself, why are they doing this? Why are they so late raising rates when everybody knows we're pretty much in a recession or around a recession and things have been slow? It's therefore because they want to. And we have to ask ourselves why. And it's because I think they want the excuse to be able to cut much further, much faster than the market expects.
We saw so much good news in crypto probably a month, 6 weeks ago, all in the same, around the same time. Ripple winning against the SEC in most part, Blackrock filing for that spot Bitcoin ETF application. So to me, it made sense why we dipped a little after that. It was sort of euphoria, so much coverage in the news. Blackrock or insiders, if they bought any, probably bought 6 months before that. Do you think just like this cool off from that euphoric little local peak, was that just a natural market cycle, or was that any like insider selling into the news?
I don't think there's insider selling into the news. I think, again, if we look at all of those, the Ripple case or the launch of the ETFs or the ETH futures ETF, none of those have been launched. So there's no actual new money coming in. So if you think of it as an economy, we're just still messing around with the same money in the economy. And a lot of those assets have gone down, like NFTs, stuff like that. So we're still waiting for more investment to come in. So what we've done is sowed the seeds for the new investment, but the space hasn't got much capital to put in. Everyone's kind of fully invested in the space. We kind of know the story. Yes, a bunch of people have stable coins and are sitting on cash, but generally speaking, we need new investors, and none of that's happened yet. So then if we step back and say, well, who's the seller? And we know that the government have been selling the Mt. Gox stuff. We know that the FTX stuff has to come onto market. So really, it's a supply issue right now. It's a promise of future demand, but we haven't got it. So the market has to deal with all this supply.
And that concludes an insightful episode of Money Tail Case. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.